you think you're ready to buy a car. Are you paying cash outright or financing? Have you thought about whether you're going to lease, buy used, buy new? Have you thought about exactly how much you can afford based on insurance, registration, interest rates, and the cost of the car itself? If you didn't have a solid answer for every single one of those questions, then this video is for you. I'm going to teach you how to buy a car you can actually afford. First question, have you decided if you're going to buy new, used, or lease? Step one to answering this question is understanding depreciation. Depreciation is when the monetary value of an asset depletes over time due to wear and tear or it's become obsolete, which means like your car's not made anymore. Most experts agree that the cost of buying a car or leasing a car over the first few years is actually pretty close to the same. It's after those first few years where the differences really start adding up. Buying a car is usually a good option for somebody who plans to drive that car for years. It's also a good option if you drive more than 12,000 miles a year. Leasing a car, on the other hand, is best for somebody who wants that new car feeling every 2 to 3 years and doesn't drive more than 12,000 miles a year. Here's the kicker about leasing. There's a mileage cap in a lease, which means that some dealerships might say, oh, you can drive for 8,000 miles a year. As soon as you hit over 8,000 miles a year, you'll start hitting fees, and those fees can really add up. So consider how much you drive before you opt for a lease. Equity is the value of car minus how much you owe on the car. It's basically the money you have in it that you could get out if you sold. So if your car is worth $10,000 and you owe $4,000, that means you have $6,000 worth of equity. Now let's say your car is worth $8,000, but you owe $9,000. That's what you call being upside down in a car. You owe more on the car than the car is worth. You don't want to end up in that situation. Getting a lease often means that you'll have a lower monthly payment than if you were to buy the same car and finance it. This is because dealerships understand depreciation. They're asking you to pay them for a car that you don't own and you have no stake in, and you'll pay for that depreciation over time. So when you return it, you've paid for all that depreciation, you don't own anything, and the dealership now gets to sell the car for more than it's worth, versus if you had bought the car, paid for that depreciation, then you probably would have had an upside of equity at the end. In the leasing case, if you don't keep that car for more than 2 to 3 years or switch to a new car and get a great leasing deal, then you're basically upside down on a car even though you don't technically own anything. Whew, that's pretty much all there is to know about leasing. But that's not all we have. Stick around to know more about new versus used car buying. So maybe you've made the decision about whether you're going to lease or buy, and that decision is buy. Well, we still have a question. Are you going to buy new or are you going to buy used? Here's the thing about new cars. A new car means a higher monthly payment and a higher rate of depreciation. Literally the second you drive it off the lot, it's worth less than the time you test drove it. New cars are also more expensive to insure and register, so overall, the price tag is pretty steep. Keep in mind also that cars are a depreciating asset, so trying to play it off as it's vintage isn't going to fly. Unless you're looking at classic car models, not gonna happen. Used cars, on the other hand, usually have higher interest rates because you're not getting all the promotions for 0% or 1.9% financing. That said, the price tag on used cars is much lower, as well as registration and insurance is lower as well. If you decide to go used, here's everything you need to check on your used car. Look for cracks, dust, dents, and damage. Check that the trunk opens and closes properly. Check if it has a history of lots of owners or accidents. Does it have framing issues? A bent frame can cause creaking, squeaking, and other annoying noises that can be a cause for concern. Those noises can mean that there's other not visible problems with your car that will need repairs down the line. How's the external condition? Are there scratches, dents, paint chips? And the internal condition? Is the fabric in good shape? Check the ceiling. And lastly, do your research. Find out how much that car is actually worth based on its condition, and find out what exact trim line that model is too. So for example, you could be buying a Camry that looks just like this Camry, but they're entirely different trim lines with entirely different price tags. You can use Kelley Blue Book to figure out the price tag on your car based on its condition, and Carfax to get the history of the car, all the owners, and even the maintenance that's been done. Speaking of, here are a couple other things to look at if you see the Carfax. Make sure that there's no accidents. See if it's ever failed an emissions inspection. Make sure that the seller is the same as the name on the car in the most recent purchase. And lastly, make sure it has never been in a rental fleet, because this could mean it has super high mileage or was used and abused. So we answered all of your questions about leasing, buying new, buying used, so you're ready to walk right into the dealership, right? Wrong. First, you need to prep your credit score. It needs to be in tip-top shape, but that's a topic for another video. The next video. The biggest part of buying a car and not getting ripped off at the car dealership is understanding the application process. Step 1, know your score going in. And what credit score do car dealerships use? It may vary, but ultimately it's up to the lender. They may use FICO Auto Scores or Vantage Score. You can read more about both of those in the description below to figure out a little bit more. The only other thing I'll say about credit scores in this video is that Credit Karma isn't the end-all be-all. Your credit score on Credit Karma can say one thing, and then depending on what model the dealership uses, it can look entirely different. So don't fight the dealers right then and there. Stay tuned for the next video to figure out what you should be looking for to make sure that they are using the correct credit score. The next step in all of this is doing your research. You have to understand what kind of car you can afford based on your budget, and that budget needs to include fuel cost, registration, insurance, car payment, what your varying interest rate might be. You might budget for one interest rate and you go in and you have an entirely different one based on that difference in credit score. So know your budget. It's also important to know that you can get multiple loan quotes. We talk a lot about hard pulls versus soft pulls on your credit. For more on that, check out the last video from Jeff, the credit guy. He'll tell you all about the difference in hard pulls versus soft pulls. But for now, it's important to know that a hard pull is what happens when a car dealer pulls your credit to see what your credit score is to give you a loan quote. That hard pull hurts your credit score. You can get multiple loan quotes over the course of 2 weeks when you're car shopping, and it'll only hurt your credit score one time. So make sure you get multiple quotes in a 2-week time span when you start shopping. We've talked a little bit about this, but it's important to understand the costs of buying a car, because it is not just the price tag, it's not just the interest rate, it's not just the insurance, it's not any of those things, it's all of them put together. Interest rates are based on your credit score, they're based on whether the car is new or used, and they're based on the term of the loan. So more months probably means a lower interest rate, because they know they'll be collecting interest from you for a longer period of time. Closing costs are another hidden expense. Taxes, fees, registration, dealer fees are a thing. You probably can't get away with eliminating all the dealer fees, but keep in mind everything's negotiable. Insurance. You'll definitely want car insurance if you're driving a new or used or leased car off the lot. And some states even require you to have insurance in order to register the vehicle. Plus, if you're buying a new car or financing a car at all, you'll be required to have full coverage, which is a little bit more expensive than a basic insurance policy. Car insurance cost varies based on the age of the car, the cost of the car, your age, and a multitude of different factors. So it's important to shop around and get the best insurance deal you possibly can. The last thing you need to budget extra for is repairs. It's important to budget differently if you're buying a BMW versus a Camry. BMWs are much more expensive to repair. And it's important to know the age of your car. If your car is older, chances are you're going to have more repairs than a brand new car. Leases, on the other hand, usually have some sort of maintenance contract. Also, they'll offer you a maintenance contract when you buy a car, new or used. Those are usually not the best deal. I'm not going to say exclusively they're not the best deal, because sometimes they have promotions that make them a very good deal. But usually say no, you can always opt into it at a later time. I don't know about you guys, but that's a lot of information about cars and buying cars and new cars and used cars and lease cars and registration and taxes and insurance and dealer costs, and not getting ripped off at the dealership can sometimes be extremely hard. So, I hope you enjoyed this video, and stay tuned, because like I talked about, there's another video coming to teach you everything you need to know about prepping your credit score to buy a car so that you get the best rate possible. If you liked this video, please hit that thumbs up button, subscribe, hit that little bell icon so that you get notifications for that next one that I was talking about. Until then, we'll see you next time.